Alrighty, guys, so we have a lot of earnings to break down on this video. You guys see the first one right here. It's Broadcom, ticker symbol AVGO. But before we dive into the video, if you guys have not gone up to 16 free stocks yet for Moomoo, what are you waiting for? The clock's ticking. Use that link down below or simply go to stassurfest.com/Moomoo. Once you guys open up an account, you get 1 free share of stock right off the bat and fund your account with at least $100. You get 5 more stocks totaling 6 stocks. And once you fund your account with at least $1,000, you get 10 more stocks totaling 16 free stocks. So if you guys want some free money, who doesn't like free money, and you want to help out the channel, use that link down below, or again, go to stassurfest.com/Moomoo, get your stocks. Let me know in the comments which ones you get. And with that being said, let's dive right into the video. So overall today, guys, the markets did very well. They did very, very well. We had the Russell up 1.05 roughly percent, pretty much up 1%. We had the NASDAQ up 1.3, S&P up 0.9, as the Dow went up 0.5%, and we had the VIX down almost 13%. Pretty rough day overall for the VIX. So we're not really going to break down the overall markets in this video, but we will talk about, again, these earnings. But quickly glancing, I mean, geez, everything went in the green today. And we saw the metals go up. We had gold up about 0.7% and silver up 1.7%. So let's just dive into it. We have AVGO here, which went down over 2% on the day. It closed at 789, and now after the bell, it is down around $20 down. Let me see here, about 4.5%. So let me actually see what they ended up reporting. Let's see here, guys. They did $10.32 adjusted EPS, which beat the 10.08, so that's good. And they beat on sales, $8.73 billion versus $8.71 billion expected. So they beat EPS and they beat on revenue, and it looks like here they see Q3 revenue of around $8.85 billion versus the $8.72 billion expected, and they generated $4.4 billion in Q2 free cash flow and expects cash flows to remain strong for Q3, which is really good news. And it looks like here they announced second quarter dividend, which is solid. What the heck's their dividend anyway? I'm not even sure, guys. And let me see here. And again, the stock's down on these earnings. Looks like their dividend is $4.60 roughly per share. I guess exactly $4.60 per share. And look at how much this stock ran up into earnings, guys. I mean, holy smokes. It was at $6.30 before earnings, I mean, a couple weeks ago, and it ran all the way to $9.20. I mean, geez Louise, why did it run up so quick, so fast? Again, from $600 to $9.20, that is just insane. And the earnings would have had to have been insane. I mean, the earnings were pretty good. Guidance was strong, but so much of that was already priced in. Again, this thing ran up to $9.20, and essentially just 3-4 trading days ago, it was under $700. Yeah, I mean, this thing was just way too far ahead of itself. That's why we're seeing the drop right now, in my opinion, at least, after the bell. So let's see if we could find support maybe around 700, 750 here on the 1-hour chart. That's right around the 180 SMA. And here on the 4-hour time frame, guys, we might find support anywhere around that 50 SMA, being about 715, 730. Time will tell. So let's see. I think Lululemon also reported today. Let me see what they're doing. Oh my gosh, look at that. This stock is up $40 per share after the bell. Big move. We closed at around 328. We went down 1% on the day, and now we're up 12% after the bell. Talk about a big move, guys. Now we're pushing 370 per share. So let me see what they ended up doing. They did let's see. They did EPS. Where the heck is it, guys? Looks like they did $2.28 EPS, which crushed the $1.98. Sales also beat $2 billion versus $1.92 billion. That's great. And they see, let me see the guidance here for Lululemon. They see EPS for Q2 around $11.74 to $11.94. Net revenue of $9.44 billion to about $9.51 billion. Not bad there. And I'm not sure what the estimate was on those. But overall, guys, look, profits rising. Sales are doing well. They beat on sales, and the stock's up $40 after the bell, 12%. That is really good. Now we're actually breaking back over the moving averages on the 4-hour chart here, and we're starting to head towards the multi-month highs being around 370, 380, 390. That's where the stocks failed since pretty much December. We fell back there in December, and we failed there recently in the beginning of May, even in April a little bit. So Lulu's doing very well. Shout out to Lululemon. We also had ChargePoint report, and mind you guys, I didn't look at any of these earnings before this video. Markets just closed less than 30 minutes ago. I'm banging out these videos back to back. So let me actually show you guys here what ChargePoint is doing. ChargePoint is down about $1 after the bell. In other words, 12-13%. Not the best look there. And they ended up doing, let me see, negative 23 cents EPS, which missed the negative 17 cents expected, and they beat on revenue, 130 million versus 128 million expected. So double, actually no, they missed EPS rather, but yeah, mixed bag earnings there for ChargePoint, and they see Q2 revenue. Oof, that's why the stock's falling, guys. Let me read you this. Q2 revenue of 148 million, 158 million versus the 165 million expected. So Q2 revenue is soft for ChargePoint, and that's probably the main reason why it is selling off. And at this point in time on the 4-hour chart, guys, we are right around the moving averages, right around $8.70, which honestly, this is a big test for the bulls. I mean, I'm actually liking this pullback. It was a little bit overbought. Now we're more oversold right by the moving averages. Let's see if bulls are about that life. Are they going to start, buying in here, buying the dip, or are we going to fall right through the moving averages, which obviously would be bad for the bulls, really good for the bears. So the next stock here, guys, and I know I'm zipping through them today, but I kind of like the faster pace, and I feel like I'm not even that fast paced. Either way, the next stock is Five Below, guys, ticker symbol FIVE, which is currently up around $11 after the bell. So they actually went down on the day, down 2% on the day. So we're recovering that loss and some here after the bell. So they ended up doing 67 cents EPS, which beat the 63 cent expected, but they missed on sales, 726 million versus 728 million expected. And it looks like here they see 2023 net sales of around 755 to 765 million versus 768 million expected. So pretty much right in line there with estimates. And let me see, anything else on EPS? Nothing really, but overall, again, we're up around $11, which equates to around 7%. Pretty nice pop here after the bell, but we're still clearly under the moving averages, both the 50 and the 180. We have a death cross, and this could be setting up for a potential bull trap. So for me, guys, I want to see Five Below break out of 190, 195 bucks. If it could start to do that, great. That'd be a spot where we might start reversing, but we're just not there quite yet, so we have to be patient with Five Below. And the next one here is Dollar General, ticker symbol DG, which, oh my God, 20%. I missed this today. What the heck? I guess they reported in the morning. They went down 20% on the day. Are you freaking kidding me? Oh my gosh. So that is a disaster. That is really, really bad. So it looks like they did EPS of $2.34, which missed the $2.38 expected, and they missed on revenue, $9.34 billion versus $9.46 billion. So double miss there for Dollar General, and they cut their full year same-store sales growth view to 1% to 2% from 3% to 5%. They don't like that, guys. Investors do not like that. Let me see what else. Let me see. They also cut their full year 23 capital spending view to 1.6 to 1.7 billion from 1.8 to 1.9. So I guess they're spending less money there. And again, 20% drop. Oh my gosh. So that is a disaster. This is a complete falling knife right now on Dollar General. We're at a fresh low on the 4-hour chart. I don't even know what to say, but all I know is I'm staying away. I'm letting the dust settle, and we'll see where it goes from there. So before we talk about the 6th stock, have you guys gotten up to 16 stocks yet for Moomoo? If not, I'm just reminding you, use that link down below. The clock's ticking. Each of those stocks could be up to $2,000, guys. Again, use that link down below or go to stassurfest.com/Moomoo. And now let's talk about the 6th stock, which is Macy's, ticker symbol M. Let me pull up Macy's, guys, and show you what's going on. So they reported earnings, and this thing, talk about volatility. Holy crap. This was at $15 pretty much in the pre-market. Earnings came out. It went down to 11. It ran back up to 13, went to about 14 during the day, and now it's it closed at around $13.80. Again, talk about volatility. So Macy's ended up doing 56 cents EPS, which beat the 45 cents expected, but they missed on sales, 4.98 billion versus 5.04 billion expected. Not the best look there. And comparable sales were roughly down 8% year over year on owned basis, 7.2% down year over year on owned plus license basis. I got to look deeper into that. I'm not sure exactly what that is, but they cut full year view to sales to about 22.8 to 23 billion. That's never good. And again, that miss on EPS does not help, or was it revenue? Either way, Macy's guys not looking the best, but I guess one good thing is somehow, some way, this did recover all the losses, and it went up on the day, funny enough, but at one point it was down around 21%, which is not the best sign. And on the 4-hour time frame, guys, we're still on a downtrend, so keep that in mind here on Macy's. And the last stock is Bilibili, ticker symbol BILI. This is currently at 1580. Did they report in the morning? Probably. Yeah, they reported in the morning. We're about $17 a share. Went down to $14.50 during the day, and we saw a little bit of a V-shaped recovery, kind of, or a W, whatever the heck you want to call that. And they ended up losing 37 cents on EPS, which beat the loss of 41 cents expected, and they beat on revenue, 738 million versus 729 roughly million expected, and they reiterated their full year 23 revenue of 3.51 to 3.8 billion versus the 3.5 billion expected. That's great. And the adjusted net loss narrows, which is also good. Revenue rises, so not bad for Bilibili, up 1.3% on the day, and I would love to see it start to break out of these moving averages, which we're not showing any signs of doing that. And until we do that, guys, I'm going to be on the sidelines. I'm going to set my alert at $20, and we'll see where it goes from that point. So with that being said, I'm going to wrap up the video. If you enjoyed it, hit the like button. Feel free to subscribe. Don't forget to get up to 16 stocks from Moomoo and 12 stocks from Webull. Link down below. It's free money, guys. Check out the Patreon as well. And with that being said, I'll catch you guys later.